one of the points that I got so many questions of business is cash. And I think one of the questions I received in my first interview, if you have the choice to pick up one statement on the financial statement out of the balance sheet, income statement, and cash flow, which one and why? And I have no doubt it was the cash flow statement, because cash flow statement is the true picture and real picture of the business, if you understand really financials. So we cannot have finance for non-finance without representing the cash out loud, and we have the best guest to explain the cash. Welcome to the show, Hesham.
Thank you, Mahmoud. Thank you so much.
طيب, if we can start our discussion on your purpose in life. Knowing you, I see you interact with people with passion and energy, and I just want to know, what is your purpose in life?
Actually, first of all, I'm thanking you so much for this opportunity to be in your program. My purpose of life is very simple. Just to live the life and try to help people during your journey of life. Anywhere and anyhow, either at work, outside the work. So, and this, by the way, you feel more happiness when you help someone else. Either to learn him something new, if you try to give him tips or for something to do it in a better way or something like this. I think this is one of things everybody should be happy when he do it with other people.
Okay, but knowing your busy schedule and critical deadlines, back-to-back meetings every day, how you manage to stay tied with your purpose, helping people, where you're overwhelmed with other tasks? How do you get the energy to help other people where you're extremely busy with other stuff?
Actually, you don't need a specific time to help people. Sometimes you can help them without even they feel that you're helping him. Just if you learn something when you are doing yourself during the job, during the work itself. If someone needs to understand about something, he heard about it or she heard about it, about terminology or specific purpose or a specific problem from banking, from treasury, from import, from export, something like this. It's good to give him the advice, to give him the explanation, even in 10-15 minutes. It doesn't mean that I have to make like 1 hour, 2 hours every week or every day to do so. This can happen every day, can happen once a week, can happen once a month, it depends. But it's not doing that on a specific way. It comes within the work itself. So with your team or outside your team, sometimes you share experience. Even when you chat during a breakfast or a dinner or you chat with people and tell them about your experience for some problem you see you heard before. So I was doing this even with my team, just to explain to them for some historical problem we face it. Some of them exist, some of them not exist anymore. But just to make it fun, to again use this kind of examples so they can learn the moral of the story itself.
Okay. Knowing your golden heart, Hesham, have you ever helped someone or tried to support someone and it fire back at you?
Happens, but it's fine. If you can do that for 100 people and you get this for 2-3 times, doesn't mean that you have to stop.
So it doesn't let you know that I'm not gonna do this again.
Not at all. No. Even I'm try to forget it. I'm forgetting immediately.
Okay. Now, if you could just tell me the story, Hesham, how did you join finance early at your career? Was it by luck, by love? What is the story behind joining finance?
Okay, I start finance, and I choose the finance as a study because from early age I like numbers. I love working with numbers, so it was one of my hobbies. And then when I came in to choose my college, I chose a college which is either to be either engineering or commercial. And based on my degree numbers,
you went to the
yes, I was not have I don't have any other choice. I can have other choice, of course, for other things, but for numbers wise, either it was only the odd choice is a commercial.
Does it mean that if you go back in time and you have the choice, will you go to the engineering?
No. Very simple and very clear about it. I'm very clear about it.
Okay.
I'm enjoying what I'm doing. And to be honest, I'll tell you something, maybe a bit fun. When I get interview, sometimes, and the VP finance at that time, without mentioning companies or name, he's asking me why you think that you can do that. I said, I love this game.
You see the work as a game.
Exactly. And sometimes you say, okay, I get any, خلاص, I don't need to do work for this job anymore. But it takes like few days, and then you have the passion for the job itself.
Okay.
That's why I stay in Treasury almost like more than 28 years now.
Okay. Now, back to Treasury. Before we go to what is the Treasury and the importance of Treasury, do you think you fall in love with Treasury? Because you stayed in Treasury
Yes.
most of your career in that.
Yes, especially that, maybe not the only job in finance, but one of the unique jobs in finance and in business in general, that you are deal with the future more than you deal with the past. So either with the current situation and the future more than you deal with the past. And this is the trick. This is why I fall in love with Treasury. Yes.
Okay. Now let's go to Treasury, our subject today.
Thank you.
Now, many people in different industries, they deal with finance on a frequent basis and on occasional basis. They're aware of the tax, controllership, business partnering. This is not like news for them. But not many people interact direct with the Treasury team, the Treasury department in that sense. If you can just elaborate what is Treasury department and the importance of Treasury in any business.
Okay. Treasury, and in my view, Treasury is most important job in our important department in the finance and in the business in general, because I can see Treasury is like the heart of the business. And the heart of the business, I'm not saying that because I'm full in love with Treasury, but because I can see the cash is everywhere. So no department are not looking for cash, either to collect money like CDs or to pay money like supply chain or HR, or even employees getting salary. So cash everywhere. And this cash is in and out. It's like a blood in the heart. So you are receiving cash and injecting cash. But this is like in and out inside the company. So that's why I can see this important for Treasury as a function. And Treasury is not only cash, but cash, of course, is one of the major responsibility of the treasurer. But also for trade finance, for risk management, for other types like relationship with banks, understand the business forecasting, all of this, it's part of Treasury. But it's like the most important thing, the item is most clear for everybody is the cash. But the other items, it helps too much to reaching this goal as well.
Okay. You mentioned something before to me, which is the perception about Treasury, that whenever we have a project finance and we need some money, they go and get a loan from the bank. They try with the bank to get the best deal when it comes to interest rate, the lower cost of financing in that sense. And then he told me something called classic Treasury or classic Treasury, and there is a new ways of financing. It's not new anymore. But there are other ways of financing. If you can elaborate more on how Treasury play between tools to finance the business, to inject the cash in the business.
Okay, so the classic way is, as you said exactly, if we have shortage of cash, so we need extra cash to manage our new project or something like this, you go to the bank and try to explain what the project and try to get loans for a specific time with a specific cost, and that's the easiest way. The new way, which is, I cannot say it new because this is almost like 5-7 years ago, it started to be a trend now, which is generating cash from the business itself. Either to delay your payment, not delay by delaying not paying to the supplier, but actually to get a win-win situation. So supplier can get his money immediately and you can pay after, let's say, if you have 90 days with supplier, you can improve it to be 180, and supplier get his money within, let's say, 15 days or so, which is a normal process during the business, which is me immediately. So this can help both sides. So it can help our company by generating more cash by not paying the supplier in 90 days, paying 180 days, which can be double the amount of that we are paying to our suppliers, and helping the suppliers to get his cash in day one. So he can give you some discount, he can give you other advantage as well. This is one side. The second side is also for your clients or distributors. You can do the same, but in opposite way. And this is the first option, our first task was the supplier finance, and this is reverse supplier finance. Reverse supplier finance, which is mainly for your clients or your distributors. So he can give him extra credit, but you can get your money earlier from the bank.
Okay. Let's pause here for a second.
Sure.
This is like a little bit advanced in terms of treasury. When it comes to my payment to the suppliers, let's take one example. If the payment term with this supplier is 90 days, that I need to pay this supplier in 90 days, what are the idea that you're proposing here to make me pay in more than 90 days, and at the same time the supplier got the money earlier than 90 days?
Okay. So actually some suppliers, especially the medium and small size, most of them, they are not getting the credit from the bank as they wish. That they have very limited credit. This is point number one. Point number two, their cost is very high. In some countries, when the interest rate in general a little bit low, it can be double. Yes, it can be double.
Because the risk profile.
Because of the risk profile. Because the difference, like, okay, if the total interest, let's say 4-5%, the difference between the big multinational companies and the small and medium supplier can be like 2%. If it's 5%, so like 40% or something like this. So it's very significant. So if you're going to give part of your facility to your supplier at your cost, because this is supplier not he's using his facility, he will use your facility. For number one, he save his facility. Number two, he will get cheap facility at your rate. So he will save this. If you calculate it, let's say for a simple example, my rate is 6% and my rate is 3% and his rate is 6%. So you can double the benefit. If you can get 90 days, you can get 180 days, and he will not pay any penny extra.
I see. So in summary, using your
strengths
in terms of low risk profile with the banking sector to get a preferred rate in dealing with your suppliers, and then it will be win-win situation for everyone between you and the bank and the supplier.
Exactly right.
Okay.
Because my job is to get my material and manufacturing and sell it. And his job to give me my raw material or package material out there. But not me and him need to working as a bank. So we have a bank that have the money and willing to sell it, lend it. So this is not like win-win, it's win-win-win.
I see.
So I win, the bank win, and my supplier win.
One point which is an eye-opener you mentioned now, that whenever we extend the payment term, whether extend or shorten the payment term, the company is acting like a bank. It's like a loan.
No, not at all.
Why?
Because here, assuming you are my supplier, and you giving me, let's say, this 90 days. So now I'm paying to you after 90 days. Now I agree with you that you will discount your invoices with the bank and you get it immediately, but after changing the credit terms between me and you to be 180.
No, I agree.
I'm paying you on a due date.
I agree.
So I'm generating cash from the business. That's what I mean.
I agree. I mean, away from the bank, as if there is no banks. The concept in the companies, I see what you're saying when it comes to the having the bank in between and have win-win-win situation between three parties.
Yes.
But most of the people, they don't realize that away from the bank, if there is any other discussion about negotiating or changing the payment term, it costs liability on the companies, because the company, whenever you extend away from the bank, as an idea, the companies, me and you, if I give you a certain payment term without a bank, as if it is like me acting as a bank, there is a cost of money.
Yes.
Because some of the people, they think that why the finance or why other function, they're making big noise about 1 day or 2 days extension in the payment term. And with this extension or shorten the payment term, that will unlock a huge sales in the P&L at the same time. You know, this negotiation.
I understand your point very clearly. I heard that many times from
other partners.
From other, yes, exactly right. By the way, you need to understand that supplier, when he put the pricing for the product, he take the cost in the pricing as well. If he's paying high level of interest, which is our case like 6%, it's already in my price what I'm going to pay. That's why if I give him a cheap finance, which is like half, like 3% of 6%, so he can extend my credit term without adding any cost to my, or I can, if I don't need cash, or nobody don't need cash, so you can get a discount with the same amount or same percentage.
Exactly.
But you can use your muscles here, and let's call it the muscle here, the power of negotiation and low profile risk company and so on, to get the benefit and to give your partner, which are your supplier, the benefit as well.
Okay. Now, there is two terms I heard before, if I may ask you these two. First of all, we hear the word capital structure and financing structure. If you can elaborate more, what is capital structure and what is financial structure, and what is the difference between both terminologies? So
actually, the capital structure, usually you have to think about it before starting the business, because the capital structure is how much the owner of the company or the shareholders of the company willing to put in this business, and then how much they can borrow from the bank. But of course, there are some very important elements here have to take into consideration. One of them is about the regulation in the country. So each country have a different regulation regarding something called SIN finance. ThinCap, this is the maximum percentage of the number, or the percentage between how much you're going to borrow to your equity and your capital.
Okay.
So if you're exceeding this, if you borrow more than this, so the interest related to the extra will not be taxable. So when you don't pay the tax department will not accepting this interest as a part of the cost of your P&L.
Okay.
So this is one of them. Second part is about banks as well. They need to see that you are willing to finance your business, and the bank can helping you. And the most, what I can say it, famous ratio is 1 to 2. You can put 1 and bank can put 2, which is 30% versus, or 35% versus 65% from the bank side. So this is the famous one. Of course, there is no specific percentage, can be 40-60, can be 50-50. It depends on the business and depends what you want to get from the business. So this is the capital structure. So this should be from the day one, because you know that when you make new business, you need to understand for how long you're going to get your money back. As much as you put in the business, it will take longer time to get it back.
Of course.
This is number one. Number two, the return of investment. If you put, let's say, if you have the option to be 1-to-1 or 1-to-2, of course 1-to-1 will give you lower return on your investment rather than 1-to-2.
Because you're matching exactly the fund from the bank.
Exactly, because your profit will be fixed. Okay, this profit will be less when you deduct the interest, but when you think the nets divided by the capital you put it will be much higher in case if you have the borrowing, which is called like gearing from the business, gearing between the cash, the capital and the borrowing. So this is the capital structure.
Okay. If we miss to decide on the capital structure at the beginning of the business, Can we fix the capital structure after going live with the business, right?
Yes. Because you can have capital injection at any point of time.
Exactly.
But if you do it in an opposite way, it will be a little bit tricky and be difficult to get your money back. Sometimes you put very high level of cash, and then after 2 years, business become very rich and become cash generation become very, very strong, and then you need to get your money back. It won't be easy. So in most of the countries, a lot of challenging to get the approval to reduce your capital.
Okay.
So sometimes what the people or some companies doing, they put a capital structure in a little bit less, and then they give like shareholder loan. So this is kind of also kind of financing, but in shape of loans, so they can get this money back easily.
I see.
If the business need this money, they can capitalize this shareholder loan later on.
So back to capital structure. I think one of the ideas here that when you start your own company, because withdrawing or reducing your capital structure or your injection of cash and as a capital at the beginning will not be as easy as injecting more.
Increasing, everybody will welcome you to increase your cash, give you all the support to increase your cash.
But withdraw some cash from your capital?
Sometimes in some countries, they have some longer process. Maybe it takes like 1 or 2 years.
Okay. Now, so that's the capital structure.
Yes.
What is finance structure?
This is the second step. So let's say we agreed that we'll use this famous percentages 1 to 2.
Okay.
So I'll put 100 million and I'm going to borrow 200 million.
Okay.
So this is going to finance 200 million. In which shape? If it's long term, short term, dollar, local currency, whatever. It depends on the business case at that time. So usually it will be different types of financing, like overdraft, just to finance your overheads, salaries, and tax, customs, something like this. Working capital finance, which mainly it will be like short term, more because currently overdraft is not welcoming too much in the banks right now, because the bank need to see the cash in and cash out to ensure that you are generating your health, the cash movement and cash flow is very healthy at your company or your entity.
Okay.
Giving you, they calculate the working capital out, the cash conversion cycle. Let's say it's 120 days, so they can give you short term 120 days. So if your calculation assumption is correct, you will be able to pay your time loan on time. But overdraft, of course, will ever will be stay, because as I'm telling you, the overheads. Secondly, is about the short term, which is between maybe say 90 days to 180 days usually. And then after that, maybe can have like medium term, in case if you have to finance some capex or so for 2 years or 3 years. It depends on the cycle and as per your calculation for how long you can get the money from buying the machine, installing the machine, and then start producing and the profit from this machine to settle the loan and the interest.
So short term for how long?
Short term, usually it will be up till 1 year.
1 year, okay.
Yes. Medium term from 1 to 3 years.
1 to 3 years, okay.
Okay. And instead of and the last point or last type here we're talking about is about long term. Long term can be 5 years or 7 years. And still, especially if you're going to build the factory from scratch. Because to starting building the factory and get it ready, maybe can take 2 years.
Exactly.
To be ready to produce. So even with that, you can get a grace period here for 2 years that you cannot pay interest during this grace period. Either 1 year, 2 years, depends on the calculation of and forecasting for when the factory will be ready to produce.
Okay.
And then the installment, it depends on your cash on the sales forecast and revenue. So based on that, you can have a plan so you can pay this installment without any interruption, because interruption here can cause too much troubles, because you lose the confidence of the bank.
Definitely.
But you need to be more flexible, and also you can keep buffer at your forecast.
Okay. So you're mentioning an important point, Hesham, here, which is the connection between Treasury Department and the rest of the finance team. Of course, you always ask for the cash for the rolling forecast as a P&L forecast, and based on that, you assess the cash requirement, and you know the horizon, how the sales plan or the service plan will take place.
Exactly.
What is the impact if a treasurer doesn't have the rolling forecast clarity? How the treasury will be managing the cash? If you can explain the relation between the treasury and the rest of the finance team on understanding the cash requirement.
It's not only finance, but even finance, supply chain, I mean procurement in specific, and also for the sales team. So you need to understand from them if there any change will be happening for the credit term. They need to sell more. Maybe they can give more credit term in a specific distributors or for a specific period or for any reason. So you need to understand that earlier, so you can plan for that, to plan for your cash flow, to understand the gap of your cash at every single month, and not even so this is the monthly, this is the minimum. Okay, but even during the month itself, inside Treasury they have like something called like cash position, to ensure that day to day there are sufficient cash to make all the business requirement in time, without any delay, without delaying payment or something like this.
Okay. Now, after we set the capital structure at the beginning of the company, we agreed what kind of capital percentage we're going to have between the owner or the founder and the bank. And then the banking sector, which is the financing structure, we agreed on it exactly how we're going to finance it, the financing part. Now, this is clear when it comes to capital structure and financing structure. If this is that simple, capital structure and finance structure, why most of the startups fail when it comes to cash? Because at the beginning, they sit together, they agreed on a capital structure, and they have a vision for the financing structure. But after 1 or 2 years, you have a fabulous idea, you have a higher sales in terms of P&L sales, you have a very good margin or a light margin at the beginning of the business when it comes to startup, but they fail because of cash at the end.
True.
Why?
Maybe we'll go back to the point that the power of negotiation for the new startup, especially if the small SMEs with the banks, it's not that strong, especially if they don't have track record. So banks, as I explained, in some countries, banks will require 3 years financials. For all of them, and if you are a startup, you don't have any financials. There is no credit. So some banks, maybe banks will not be able to give you credit at all. This is number one. Number two, those people or those entities or the startup, when they start negotiating with the customers as well, they want to sell. So they try to make it attractive. So they take even the margin, any small margin, and also try to give the maximum credit term.
You were mentioning the situation of the startups and how they got squeezed between the suppliers and sales as well as a customers.
In addition to the bank as well.
In addition to the bank.
Yeah, but sometimes maybe their finance, they don't get the finance they should get. Sometimes they cannot manage their cash, they're not generating cash to meet their obligation. So if you didn't meet your obligation once or twice to your supplier say, okay, thank you so much, please pay me in advance. So make the case much more worth.
Okay.
And at the same times, if your reputation it's impacted because of that, even your customer will say, okay, I'll try to find someone else because I'm not sure that you'll able to give me whatever I want on time or not because of the problems with our suppliers. But that's why this happening. Even some countries try to support those sectors, but honestly, it's not enough. The support is not enough.
So in that case, if one of the startup came to you, Hesham, and they said, okay, yes, you're right, I have this situation. When I go to customers to sell, they ask for payment term, and I am squeezed, I need to deliver my target, we need to grow the business, so I accept that. And when it comes to bank and suppliers, I don't have credit history, I don't have X many years of financial statement, and I have to accept their payment in advance, cash in advance, or a shortened payment term. What kind of advice you give to such a startup to survive when it comes to cash?
Maybe the easiest one, it will be with their own customers, especially if they are dealing with big names. So they can ask them to joining their own supplier finance program. So in this case, they will not depending on their own facility. They will depend on this big company or this big customer facility, and also will get better condition or cost at least.
Okay.
So this can help them at least. If the three elements you cannot match the three elements, at least one element can helping you. Then once you have this one, it can generate more cash. Then you can start having the relationship. Based on this relationship, you're having your financial, then your position will be more stronger in front of banks. So the banks starting looking at your file in different way, and then you can start have your own finance. And it goes step by step.
So the advice here is to follow the initial situation, which is win-win-win situation.
Exactly right.
To see one of the big corporation that they have supplier finance or customer finance, where they get their money earlier from the bank in that sense. So their cash position is not that impacted, and they can sell at the same time.
Exactly. By the way, the supplier finance not only for big companies now, even for medium and small and mediums as well, it's available.
Okay.
So the program, it become now very everybody's familiar with the project, and most of the companies are using this because it helps both sides, either supplier and customer.
Okay. If you go back to the basic terminologies, so I think now we covered the big chunk of terminology. You mentioned the overdraft. You mentioned the capital structure, finance structure as well, and the difference between both. But if you just cover the basic terminologies that non-finance audience should be aware of when it comes to Treasury Department.
Maybe the terminology from cash, maybe you mentioned most of them here, but there are some other terminology, let's say, for the risk management, like forward deal, like swap, like options. Also, if we went to the trade finance, which is mainly to manage your import and export transactions. So there are letter of credit, which is called LCs, letter of guarantees, which is called LGs, IDCs, which is income documents for collection or documents for collection. What else? Standby LC, which is like standby LC, a little bit tricky one, because it's kind of guarantee and LC in the same time. And this is much more popular for the big tickets, especially that if you have a really long relationship with your customer. And this become like going on from time to time, and you are revolving this transaction from time to time. It's better to have the standby LC for 1 year, which can be cheaper at that stage. For this kind of terminology, it's very important, not only for Treasury, for even CDs, especially for export, and also for procurement, which is for import as well, because both of them are the same side.
If we go deeper in that, that will be a quick help from your end, Hesham.
Sure.
If we explain the difference between LCs, LGs, standby LCs, what are the difference? Let's pick one by one and then explain.
Okay. So let me take it in a simple way. So if there are two parties, they dealing with each other for the first time, so there is no confidence, there is no trust. Okay, and the other two, they are dealing with each other, let's say 15 years ago. Do you think that both of them they use the same facility or same way of trading?
Definitely no.
Okay, let's take it from the easier to the hardest. So if there are two parties, the exporter and the importer, they have long-term relationship, so they can have an open account. I'll send you the goods, you'll send me the money, because there are big trust between us. There is no even IDCs or sometimes, by the way, this become obligatory. Even there are trust between me and you, but the regulation in my country or your country
required to
have the letter of credit or documents for collection or whatever. So this is the first one. Second one is documents for collection. Documents for collection, you ship the goods, you give me the documents, send it to me directly. But I have to take documents to go to my bank, to get stamped, to give the instruction to the bank, to pay you on the due date. This is the documents for collection.
Okay.
Then after that, the LC. And even within the LC, there are any different type of LC. LC is like a contract between me and you.
Okay.
But not between me and you direct, between my bank and your bank.
So my representative as a bank and your bank as a representative as well.
Right, exactly right. So you will send me your performa invoice. What's your proposal? Okay. Then I take your proposal or your performa invoice. I'll put it in format the bank for the LC, because I'm the one who's going to import from you. The bank send this condition to your bank. You check it. You check that it's matching with what you mentioned in your performa invoice, and then you accept it. So this has become like a contract between my bank and your bank. If you share with me these documents 1, 2, 3, 4, I will pay you. It's not for the goods, it's for documents. You see what I mean? As simple as that.
Okay.
Any documents, we can have another session for the documentation and for this kind of trading. But I'm saying this is the LC. Standby LC, it's kind of, how I can say it, kind of guarantee. So I'll do the same like the LC, and I'll send it to you. You will accept it.
Okay.
And then my bank will be issuing the LC to your bank.
Okay.
So you have the but this is standby LC. Based on that, you can ship the goods to me, and I'll pay you direct, not through the bank.
I see. Okay.
But if the standby LC, let's say for $10 million or 10 million. Okay. So if you sell me the goods and I pay you $500,000, so 9,500,000 remaining until they become almost zero. Then we can make a new one. In case if you send me the goods and they didn't pay you, you have the right to go to your bank and say, Hesham didn't pay me this 300,000. You will take it from the bank directly, and your bank take it from my bank.
So the bank's still there in the standby LC?
Standby.
Standby, exactly. So both two banks are standby.
Yes.
For any conflict or any...
No, exactly.
Okay.
If anyone of you feel if he failed to meet his obligation, he can get the money from the bank.
That's why I call standby LC.
Exactly.
But other than the standby LC, we're dealing with each other directly.
Yeah.
But the bank's still there as well as a standby in case of there is any deficit or any...
Exactly. And the standby LC can be not for the full amount that you're doing during the year, but you can do it for even less than that. So you can do that on a regular basis. And then after that, the bank guarantee. The bank guarantee is just in case I can give you advance payment. Okay. To send me the machine, because you need like advance payment, because you need to make sure that not after you build in the machine, I said, okay, sorry, and I don't need it. But I need some confirmation, and also to help you even finance for this machine.
Exactly.
So I'll give you, let's say, 30%
in advance.
So I ask you to give me bank guarantee in case if you didn't ship the goods with a machine that mainly it will be for machines in case of importation, but LGs even for some local transaction as well can happen.
Okay.
Just to give you another example for that, but this is the most common one. So if I put in condition, if you didn't ship the machine up till specific date, let's say by 31st of December, I have the right to get my money back from your bank.
Exactly, because I give you the money in advance, and I want to guarantee that my money will not be vanish.
Exactly.
If you didn't fulfill the commitment.
Yes, because I cannot wait you for forever.
Exactly, because there is cost of money as well. I cannot give you the money.
But sometimes the letter of guarantee, if we are in the same country and you are a distributor, and I'm giving you 60 days, but you are a new distributor, I'll ask you to give me a bank guarantee for, let's say, 60 days business, and stay with me forever. No, at least for 2-3 years until we have build the relationship
and the trust.
And the trust as well, yes.
Okay.
Because my maximum exposure is this 60 days.
Okay. So covering the maximum exposure to make sure that I'm fully covered until we build the trust, and then we can see how we can manage the business together.
Right. So this is the main terminology for the trade finance. Also I mentioned this for the risk management, which is for forward deals, and I'm sure most of the people are fully aware about it. Just to ensure that you can get foreign currency at specific point at specific rate.
That's becoming very familiar with the currency fluctuation everywhere now.
Everywhere, yes. But to be honest, this is not only with the fluctuation. Even when the currency are stable, this should be kind of guarantee to the business that they will, even in case if this happened for any reason, maybe political reason, maybe anything else happening, either in your country, in your customer country, and in worldwide,
you're fully covered when
you
it
are
comes
fully
to
covered in case of
fluctuations.
yes, in case of the evaluation happening for any of the currencies, you are already covered.
Okay, this is forward deal.
And this is the forward deal. Yes.
Okay, that's a good summary of the basic terminology when it comes to treasury.
Okay.
Now, if you just move back, you've been in treasury for more than 20 years, right?
28 years, yeah.
Yeah. So in that sense, I believe you've seen the evolvement of the banking and treasury across all that period of time.
Yeah, I mean, I see it in a sense. Everything it was in the pie bin.
Exactly.
The only automated thing was the calculator. I'm not joking. True. Not for treasury, for treasury and finance. And then even the payment, either it was being cash or by checks.
Yeah.
And that's it. No more.
That's it.
Yes. No more options. Either to pay cash or to pay in check. And check will become like prestige, and this for the big companies.
Okay.
So when we start, I think, if I remember, my memory helped me, 2005, 2006, moving to e-payment, electronic payment. A lot of people was afraid about that because, the process itself to issue the check to the customer, it was taking at least maybe 15, 20 days.
Wow.
Not that documentation. The documentation get from supplier, accepted, everything is okay, just prepare, and then to send it to the audit on a daily basis, like 100 checks, audit like 3-4 days, and then asking for some specific point, what is this, what is that. It takes too much time until they approve it, and after they approve it, have to go to the authorized signatories, which is most of the company have more than one to sign the checks to be in the safe side. So it can, if it's not available, you have to wait for a day or two or a week, and then once it gets signed from the signature one, you have to go to signature two, and then you have to deliver cash. So this was like a nightmare, and if checks lost between me, you, and the customer, it's another big issue. What happens? I see these cases myself.
Okay.
And then after that, we move to this kind of the electronic payment, which can be, in my view, this was one of the biggest moved during the history that moved the electronic payment, and then they can make that just a click, can approve 100 payment in the same day. People was afraid in the beginning, but after using that, nobody today is remember that what we're doing before that's like mobile.
Exactly.
Nobody can expect that they can live without mobile.
Exactly.
So now, of course, you have this credit card and this platforms that you can pay, Apple Pay and so on. This kind of things will simplify our life. So everybody have his own bank account in his pocket.
Okay.
Not anymore hard cash or checks or something. So this is as of now. For the future, I think more will come.
Like what?
Actually, I tell you something personally. In my bank here, I opened the bank almost like 12 years ago. I go to the bank, I think 3-4 times.
To open the bank account?
No. I opened the bank account, and since I opened the bank account till today, I went to the bank 3-4 times.
Oh, it's 3-4 times. Okay.
So you can everything I do it on. Not me. I'm taking myself as an example. But everybody, they do everything online now.
Okay.
Either by phone or by the bank platform or whatever. So I think this also, it will be automated more. So I don't think the cash will be exists anymore, maybe 5 years or 10 years.
Okay.
Even the people who's not well educated, they are using this platform very, very well.
Yeah, now it's giving. Everyone is using the mobile application for payments.
Exactly. I'm not telling you only the finance team or non-finance team. Even the people not educated a proper way, they use it very well, and the other application as well. I think technology, it's helping too much. Even something else which is about the artificial intelligence as well. it can help. So maybe, it's not maybe even, some banks, I see there are, you can go there and you can deal with
A machine.
the machine, like you are dealing with a employee.
Exactly.
And some banks are starting doing that in a
smart branch.
a smart branch, everything.
Electronic branch.
Yes, now you are dealing with a machine, only with machine.
Do you think in the 5-10 years, all the bank branch will disappear and it will be fully e-smart branch?
Nobody knows. Maybe it can happen. Easy can happen. But maybe it will not be 100%. Maybe it can be at least maybe 50%, 75%. But branch will stay there sometimes for verifying your signature. As I'm telling you, even we didn't reach that time yet. And someone can go to the bank for 5 years, 4 or 5 times in 10 years.
In 10 years, okay.
So like one every 2 years, which is nothing.
Okay. So going back to the bank and the branch and moving from that digital disruption, one of the key elements in the treasurer is communication and relation with the bank.
Very true.
How to manage the business requirements quickly and efficiently, because the business is demanding every single day.
Yes.
If you can elaborate more the importance of communication and relationship management for the treasurer with the banking sector as well.
Actually, this is maybe this part. Most of the people don't give them the right importation for this topic, because I feel this is one of the very important topic, and this is built during the time. So I know some people 20 years ago, 25 years ago, they was very junior. Now they are head of banks. So this makes things much more easier. But the most important thing I learned during my life, or my professional life, is to be honest with your bank, because he's your partner. He's not just a bank. He's a partner. If you treat him wrongly and rely on him, you lost him forever.
I agree.
So even if you having a problem, you have to explain the problem so you can think together and to find a solution. And we do this many, many times. But being honest with the bank and friendly with the bank. Friendly doesn't mean that you're accepting everything the bank say. So sometimes we have not a fight, but hard negotiation, very hard negotiation, but end of the day, in a friendly way. So we are fighting on the paper. Fine, this condition I'm not accepting. No, you have to accept this. No, I'll accept part of this. You accept part of this. So the kind of negotiation is fine. But as both parties are respecting each other, and they are believing each other, and they are honest with each other, and this happening during the time. That's why here this is kind of relationship. It's like emotional bank account. So it can keep growing day after day. Then after that, once you say something to the bank, he's accepting this from you. Of course, you will not waiting for, let's say, the documentation and so on. But he can feel the urgency and try to give you the maximum flexibility as much as you can. So this is sometimes will be different between treasurer and treasurer. So treasurer can get this exception, other treasurer cannot get this exception. Because of the relationship and also the old history between the treasurer and the bank. They trust, both of them, they testing each other many, many times. And he said something, he meet his obligation. The bank can give him this exception or this kind of facility in very short term. The other, they have to get everything in full before they start.
Okay. So if we move from the importance of communication and building strong relationships between the treasurer and the banking sector, if you like to give an advice to a new person joining the treasury department today, what kind of advice will you give to this person?
Actually, it's not only in treasury only, it's finance in general. So let me give you some general advice, if I can say that. So first of all, especially for the new generation, I know maybe some new generation will not happy with what I'm going to say. They are very rushed. They want to move up very quickly, which is, in my view, it's not the right thing, because you need to understand the business very well, regardless where you are working on. So you need to understand your business, your core job, and then what is around your job, to understand the business in general. Then you can contribute more And then you can, even if you moved up, you will move up in very strong pace, not just moving up because you are intelligent or can get things done in very quickly way, and this and that is good. It's good, very, very, very good. But if you have the base of the business, understanding the business, the business in very good way, I think this will help you to move up in a very steady progress. This is number one. Number two, of course, the IT skills. It's very important now. Very, very important. So every day you can hear about something new. Every day you can hear about something. So ChatGPT as example for the latest things. True. So most of the people using that. So everything is keep changing, even in Treasury. And this is maybe one of the reasons that I like to do Treasury, is keep changing every day as well. So every day new option, every day new opportunity happening there. And you have to keep eye about the world around you. Not only from economic perspective, even for political, because political and economic is like
two sides
of the same coin. Exactly right. I think this is most of the general advice for Treasury specifically. He need to take his time, because experience comes with time. Not only with the time, come with the problems. As much problems you see, either you solve it by yourself or you see someone else resolve it, you will get the experience. When you think, if you think that you want to be in Treasury, you need to think that to stay for longer time than other job. Because here experience is very, very important.
Okay. I think with this note of being patient, keen on acquiring experience rather than just ticking the box and moving ahead. It's a different school, and I agree with you. We face the same challenge with different generation. Every generation, Generation Z and millennials and different generation, they have their own style, but I fully agree. Having a deep understanding of the business and hands-on on the details will give you the power to grow. And even when you grow and be in a senior position, you will be more strong to manage your business and have your own capability to manage that. So I fully agree with you on that, Hesham.
So if you allow me to add one point, so the power of details gives you the opportunity to give you the power to find opportunity for the business. Without knowing details, maybe the opportunity will be in front of you, but you cannot see it because you are not aware about this detail.
I agree with you. I think that's a fabulous capsule, a small capsule from a Treasury point of view. It's an eye-opener for the importance of Treasury. I'll go back to your example. So Treasury is like the beating heart of the business, same as the heart in our body, getting some blood and injecting body. So the Treasury is making sure that you get enough cash and you inject enough cash in the business, so the business keep flying and growing with that beating heart in that sense. It was a pleasure having you, Hesham, in that discussion. I really appreciating having this discussion with you.
Thank you so much.
Thank you, Hesham.
Thank you, Habib.